Okay, hello students, welcome back to the second the video clips. In this video clip, I will cover how to create a cash budget. In the last video clip, we'll create the cash schedules and the sales that includes the sales schedule, purchase schedule, and wages and commission schedules. The reason why we created those schedules is that all the business activities are based on the accrual basis, which is different from actual cash transaction. That's why here the sales is different from collections. The purchase inventory is different from the disbursements for the purchase, and the wages and commissions is different from the actual disbursements, cash out wages and commissions. Yes, please read that descriptions to build the cash budget. We also have the rent towards miscellaneous expenses and truck purchases. The reason why I didn't create the cash schedules of these expenses schedules is that the expenses exactly the same as the cash out, right? Okay. And then we have also important information here, like 23,000 minimum cash balance required to do their business operations on a monthly basis, and especially for the working capital. Now, the beginning cash balance started, and then cash receipt from customers, the customer, the sales on credit. And then cash disbursement, inventory purchase, wages and the miscellaneous and rent and truck purchase. And then minimum cash balance desired. We got the total cash needed. The difference between cash available and cash needed, if it shows a negative, and then we need to finance. We need to get more financing, right? If it shows the positive amount, and then we repay. The interest calculation is based on the remaining balance of the last month times 1.5% as indicated in this description. And then total cash effects of financing is calculated: new borrowing minus repayment and interest. That is actual cash in and out of the financing, right? And then ending cash balance must be equal or over 23,000 based on their cash balance policy. How to get it? Yeah, minimum cash balance minus excess total cash from operation and a total cash effect from financing in and out, right? And then anyway, you must be sure that this ending cash balance should be over 23,000. Okay, then let's go. The beginning cash balance is the ending balance of the prior month. And then we have this cash balance in the initial balance sheet as of the March 31st. And then collection from customers from Schedule A, right? Where is it? There you go. That's why we build this, the cash collection cycle, cash collection, the schedule. The sum of these two is now the total cash available for needs before financing. We need to calculate the total disbursement from inventory purchase schedule B, and then schedule C, and then miscellaneous. Again, the reason why we didn't create the schedule is that the actual cash out is exactly the same as expenses. We don't need to create. And then 5% of sales projected, forecasted. And then rent is on description. How much is the rent amount? The rent amount is 4,600. There you go, right? 4,600. And then truck purchase was 6,900, right? In cash. So we got total disbursement. How much is total disbursement then? Just the sum goes up. Then we have 136,000 is total disbursements, plus minimum cash balance desired so that we can get the total cash needed. The minimum balance is the fixed, at least 23,000 cash. Total cash needed is sum these two up. 159, which is greater than the cash available for needs before financing, right? So the excess total cash is not actually excess, but shortage of cash, the 30,900. And then cash from financing. Now we need this amount, right? And then repayment, we just started this financing, so there's no repayment. And then the loan balance is the difference between two, right? New borrowing minus repayment. Interest, do we have interest? We just borrowed, right? The total cash effect of financing, now how to get it? New borrowing, right? The new borrowing minus the payment minus interest is total cash effects from new financing. The ending cash balance is minimum cash balance 23,000 minus excess total cash. Oh, this should be positive though, I'm sorry. Excess because it's excess, which is minus or same, right? And then plus the total cash, the effect. Total cash effect, where is total cash effect? There we go, right? So we got this amount. Minus excess or, yeah, the shortage of cash, which is positive, the plus, right? So we got just all this, sum this up, right? Now let's move on to the next. The beginning cash balance is the ending balance, right, of the prior month. And then cash collection, exactly the same. By doing so, we collect exactly right, the amount of collection from Schedule A, right? And then let's just drag it to the right. So you can just drag to the right side in that way. So I'm going to drag it to the right. And then inventory, also wages, also we have the calculated, right? And then we linked all this, the expenses, all the disbursement from the schedules previously we the calculated. And then here is the same, right? We have the same. It should be calculated from 5% of the sales, and then let's just drag. And then rent is the same amount every month. And then truck purchase, do we have a truck purchase second month? No, in the description we don't have. So we don't have any truck purchase. And then total disbursement, how to get it? Just sum those up. And then minimum cash balance desired is just the fixed, right? Fixed, which is given. And then total cash needed is sum these two up. Okay. And then excess total cash. Now we have 3,335. So new borrowing. So first we need to calculate first, because we don't have to borrow money because the additional the loan, because we create actual cash. But here this interest should be right calculated. How much percentage? 1.5% from the balance, the loan balance. Always first, and then how much is the new borrowing? There's no borrowing because we actually got the excess cash. Repayment need to calculate by subtracting interest, right? We cannot repay all this amount because we need to pay interest, right? So we have now the repayment 2,871. Then loan balance is now how to get it, right? This 30,935 loan balance minus repayment. Now we have the new loan balance reduced by, right, the repayment and interest payment that were covered by the excess total cash 3,335 from operation, right? Then let's just drag it to the right. Then we got it. Then let's just drag one more time, and then we have we got the operating the cash in 21,620, and then definitely we can the repay, right? Here new borrowing, do we need? No. And then first always we need to calculate the interest from new balance, right, times 1.5% so that we can get actual repayment amount. We need to pay 421, and then repayment should be 21,621, not full amount, but we needed to, right, subtract this so that this 21,620 covered this repayment as well as the interest, right? But still this loan balance is greater than the repayment, so the loan balance is reduced by now this repayment after interest payment. Got it? Yeah. And then let's just drag to the right side, and then now we still maintain this $23,000 ending balance cash. Good. And then it's converted to the beginning balance of the July. And then let's go to the July, 13,455. Wow, we still made the operating the cash in, right? And then do we need new loan? No, it's 0. And then we need to repay, but again, always we need to calculate, right, this interest from the remaining balance. And then let's repay. How much we pay out? This minus this. Then we repaid more, right? Yeah, it is stupid because the loan balance remaining it at most is 6,865, right? So this amount should be how much, right? The repayment. This, yeah, the schedule is this cash budget in financing is important, right? We don't pay all this 13,455. So we pay out this remaining balance, right? 6,865. So we have, right, this just the zero balance. We have just the zero balance because we paid out, right? Then the total cash effect. How much is the total cash effect? Right, the sum of these two up, right? Sum of the repayment amount, and then again the last the calculation is important when we create more cash than this loan balance, right? And then definitely we finally have more than 23,000, the minimum balance of cash. Cool. Then let's drag. We don't have any balance. Okay, let me just drag to the right, and then let's just drag to the. Okay, we don't have here still, and then let's just drag it to the. Here there's no repayment, and then there's no loan balance. There's no interest because we don't have the remaining any remaining balance. And then let's just drag it to the right. Okay, good. On September still we made a profit, right? We made profit. The cash in actual the excess cash. So there's no anything, right? And then let's just but we need to drag this to follow. Then let me just drag. Wow, now we have still 32,672, right? But from October, now we now have shortage of cash, 4,178. Yeah, because some shortage of this cash, we need to now borrow money one more time, right? It's 4,780, 4,178, and then just we borrow exactly same procedure when we start borrowing in April. Then loan balance remaining. How much is the loan balance? Again, this minus this, and then we just borrow, right? There's no interest yet. And then let's just drag it to the right. On October, on November, now, we still a lack of cash, right? The cash available 141, but the cash disbursement 154,000. We still need money, even though we borrowed money 4,174 the prior month, right? Then how much we need money? If we put this like that, then how do we cover the interest expense of the current balance? That's the point, right? So we need more money, including the interest expense, right? So it's not all. We need to calculate first, right? 1.5% monthly interest rate times the loan balance. So the total amount we need to borrow additionally is the sum these two up to cover new borrowing and new the interest expense of the prior month borrowing from the prior month borrowing. So that is the total amount we borrow, right? We just borrow. Additionally, we just borrow, and then we lack of cash still. So there's no repayment. That's why we borrow money. And then the 4,174. Then how do you get this number? Right here, this 4,000. Now, sum these two up, and the new borrowing. So the loan balance, new loan balance is 17,640. Now, okay, just give me a second. I want to make this territory. Then the cash effect from financing is 13,400. Then let's just drag one more time, because again you have to get that insight. If we have $23,000, the minimum balance, that means the company, right, the borrowed more money, right, the additional loan. If we have more than 23,000, now we start generating cash, and then we pay out all this, the loan balance. Okay, now finally we start making cash in. So last month, December, the excess of total cash is positive 14,800. So here, 14,000, do we need additional loan, additional borrowing? No, we don't need, so it's zero, right? How about the repayment, right? We have to pay, but again, when you calculate the repayment, we need to, right, calculate always the interest first to cover, right? So the repayment amount is not all the 14,800 out of 17,641, because this 14,800 should cover 265 interests from the prior balance of the loan, right? So the repayment should be, now you understood, right? This 14,800 minus, right, only at this amount. Cool. Then the total loan balance remaining is now 3,105. Then let's just drag to the right. Okay, this is still evidence that the reason why we have still just the minimum balance of 23,000 is that, okay, we still have loan balance to pay out. Okay. Yeah, this is all. This is really important and very practical and very useful practice. What happens if we need additional financing because we don't have excess cash to cover our business? And then what happens if we just cover? What if we need additional financing? We still need more financing after month, right? And then that explains all the procedure how to create the cash budget in the monthly basis. I want you to practice this several times. Is the essential of this the exercise. Okay, see you in the next video clip. How we'll finish up how to create the projected monthly financial statement, the income statement, balance sheet, and cash flow statement. Okay.